the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, everybody. Welcome aboard another episode of Jet Setting Wealth Advisory, where we help you navigate your financial future with clarity, strategy, and confidence. I'm your host, David T.U., wealth advisor, active airline pilot, and founder of the DTY Wealth Planning Solutions. With over 20 years of experience, I specialize in helping clients build tax-efficient strategies and long-term wealth plans designed to reach their financial destination. Today, we're joined by Tevia Hoalst, owner and CEO of TeKoda Accounting. With over 15 years of experience, Tevia helps business owners simplify their finance and truly understand what their numbers are telling them. What makes this conversation especially valuable is the alignment between proactive accounting and strategic wealth planning, two critical components for any business owner looking to grow with intentions and confidence. So Tevia, welcome aboard. Great to have you with us today.
Hi, David. Thank you so much. I'm glad to be here.
Fantastic. So let's get started with just some general questions. So what inspired you to get started with TeKoda Accounting, and what did you want to do differently from traditional accounting firm?
Yeah, I mean, it's not unlike a lot of stories you hear. I was a corporate dropout, and my last position I ever had was with a corporation, and I just didn't appreciate the culture and how people were treated. So I've said this many, many, many times, but my husband was the first to hear that I didn't know what I even wanted to provide, but I knew I wanted it to be high culture based. And that's what I've set out to achieve over the last 8 years at TeKoda. We are very different from what's in the industry. I really respect what's out there in the accounting industry, but it is very numbers based from the perspective of highest dollar, lowest touch is really how I would summarize the experience in the general accounting industry. And the way that we are different is we are very high touch, very high service. Our mission is to obliterate the status quo. And I believe what gets focused on is what you achieve, which we'll talk about with numbers, but also in my team every single Monday, they know they have to come to our Monday meetings with examples of how they have obliterated for our clients and for each other. And that is what sustains our community and our service.
So you describe yourself not as an employee, but also as a partner to your clients. What does that relationship look like in real live practice?
Yeah, it's very different than traditional. It is my own opinion of my experience of, again, the general industry that they want to talk to you as little as possible to keep their margin high. And we do the exact opposite. I call us a fractional accounting team.
Sure.
And we partner with our clients, and we want to talk to our clients actually as much as possible. We want to learn about them. We actually want to be invested, understand their goals, what they want to know, so that when we proactively serve them and provide reports and information financially, we can be ahead of the game and actually be a part of the team, and rather than a very retroactive just reporting of financials.
Fantastic. Your background includes both bookkeeping and strong customer service experience. How has that shaped the way you run your business today?
I would say the service is everything. I would say I haven't worked in the business in years, so I'm the very worst at the bookkeeping part. I hire the very best and let them do their thing. But as far as the service part goes, I run our culture. I drive what our company focuses on. And that has been an annoyance my entire life for everyone around me, that I really think it's very little actions that change the bar from very status quo to obliterating. And it's the little things, caring, thinking forward. And those are the kind of people that I not only hire, but foster that challenge of what are the little things that can make the difference for the companies out there? What do they need? How can we help just a little bit more? And that's really what what I focus on and I bring from my background.
You're the first guest on the podcast that has used the word obliterated to basically maximize the service from the traditional financial CPA work
Sure.
that they do. So I love that.
That is an
It's
award that I will take. The
yeah.
first, because we focus on it every day. So
What is the biggest financial mistake that you see small business owners make while thinking that they think that they're doing everything right? There's the aha moment that you're providing them. What do you say to that?
I think it's the connection between profit and cash. A lot of companies run, and it's typical, it doesn't come from anywhere from judgment, but a lot of owners just focus on their P&L. Did I make more than I spent? And the reality is that is not a full picture of your company. And actually, the number one factor that we need to be focused on is what is our cash flow? Just because you might have posted profit in a certain period, a month or a quarter or a year, does not mean that your cash flow is strong. So you may make a hiring decision or a purchase that disrupts that cash flow. And if you don't understand that, even
Mm.
though you're a profitable company, you could still fail and create problems for yourself if you do not have a good handle on that those two things are different and where do they stand individually.
It's great. So, why do you think that so many businesses appear to be profitable because they only look at their focus on their profit and loss statement, but still end up being cash? How
Yeah.
does that happen?
Well, it's because at a very high level, very simplified, your P&L focuses on your revenue and your expenses. Those are two of your four factors in your business. So if you're only focused on the revenue and expenses, you're really looking at a 50% picture. Over on your balance sheet is where your assets and your liabilities live. And that can really shape the cash flow cycle because if you have long AR, which is your accounts receivable, if you are not collecting as quickly as you're having expenses, you can get in a cash flow crunch. Separately, if you have too high of liabilities, loans, or different things coming out, and you're not considering that in the cash flow, then if you're only looking at the revenue and expenses, you could be missing out on that whole picture and what's really going out of the business. I think another thing that gets missed is also on the balance sheet in the equity section. When owners are taking distributions do not hit your P&L.
Mhm.
So they're after your profit on your P&L and they only hit the balance sheet. They minus cash, they increase or decrease equity depending on what you're doing.
Mhm.
And if you're taking that out, but you're only looking at the P&L and you're not factoring that in, you can get yourself in a cash flow crunch.
Sure. So you talk about helping clients understand what their numbers are telling them. Where do most owners get stuck when trying to interpret their financials that you have provided for them?
I would just say a lot of questions that we get, which are again are super fair, is what should I be spending? Many
Uh-huh.
businesses that we work with, they've only ever seen their own financials because, most companies only work on one company. And we are in a really cool position where we see the back end of hundreds of companies. So we can compare from different industries. We can see what one owner is doing versus another. And also, there's data out there from the IRS that we can pull that
Uh-huh.
when you're should be forecasting or budgeting for your company, every single line of your P&L should have a target percentage of what you are spending. And if you only look at your own history and say you spend 10% on marketing, well, for you, 10% on marketing might be normal year over year.
Mhm.
But do you know maybe it's normal in your industry to spend 2%? Maybe the average is 15%. And if you don't know that, how are you flexing that financial muscle to really maximize how your company is operating and what could be your performance?
Excellent. Really good. So if a business owner only looks at their numbers, two or three numbers each month, whether it's just profit and loss or balance sheet or just liability side, what should they actually be paying attention to?
Yeah. So, a couple factors to take away if you get nothing else from this podcast is number one, we talked about it, cash flow. You have a cash flow statement in whatever financial system you're using. And I always encourage owners, don't get overwhelmed by the numbers. Make it truncate it. Truncate it so you're just getting top level numbers. Start there.
Hmm,
And you're going to be
sure.
able to see really quickly, is my cash flow positive or negative? That's step one. You need to know that. Step two, do take a look at your profit on your P&L after you understand the cash flow as well. You need to pair those together, and you want to obviously see not only positive profit, but you want to have a target profit of what does my industry average for profit? What am I going for? What are my goals? Am I in alignment with that? Do I have any kind of KPIs or scorecard that I'm watching against this? And then another one, if you have receivables or payables, you
Mhm.
want to know the turnover days. Are we long on this? Do we need to spend some time here collecting or paying, to our either our clients or our vendors, depending on which you're looking at? And getting a really good handle on that will help your cash flow and your planning long term.
So, how do these numbers help a individual or a business owner help guide them better in making better decisions, especially if they're in that growth mode?
Yeah, I would say that many owners, I'm not unlike this,
Or on yourself.
well, yeah, I mean, you have your zone of genius, right? Like whatever industry you're in or whatever your company is doing, you have a lot of confidence in that because that's what you're great at. And if that does not include finance, then you really want to be careful about that you are using all these factors because many owners that we see come in our door, we're remote, but I'll use that analogy. They are operating by gut feel, right? And or a minimal amount of information that they're comfortable with. That's very common that we see, and it's not the whole picture. So you may be making profit, you may be doing great, but I can promise you every owner that we've ever plugged into having more information, not an overwhelming amount, but just the right amount, and that they're using their financials and they're getting timely reporting, their numbers always do better. You never regret plugging in and having better numbers because it reduces risk. And everything we're doing in business is trying to create stability and reduce risk. And the more information that you have and that you use it well reduces that risk.
So, I'm glad you mentioned that. So, what is exactly the difference that you can share with us between just tracking numbers and actually using them strategically?
Yeah, I would say that is kind of the same question to being busy versus being productive. It's
Ah,
the exact same idea.
mm,
You might have numbers, but are you using them? Are you planning against them? I mentioned it earlier. Are you setting goals against them? Are you tracking those goals timely? So, just like being busy, you might not be doing everything you need to be doing. You might have the data, but are you using it? And are you really making it? The financials can be the star of your company when you plug it in correctly and you combine what is your special ability and skill with everything in your business. When you combine it with strong financials, you're going to beat the competition because not everybody's doing.
one of the biggest decision that business owners face is hiring. I deal with that myself. How can you tell someone if they can truly afford to bring on a new team member, a new employee, part time, full time? How do you go about having this type of conversation with business owners?
Yeah, so two factors here. One would be what kind of hire is it? Is it a sales-based hire or is it an efficiency
Mm,
like internal hire?
mm,
And the difference between the two is are you expecting that hire to partially or immediately pay for themselves, right? Or if it's like more of an administrative hire, do you have the cash to cover that increase in expense, right? So the two decisions that come with that, again, we go and we look at your percentages. We can run down very quickly in your P&L and know if you have the room in your profit to hire, or alternatively, should they be bringing in enough revenue to offset that the hire makes sense? So there's a couple of factors that we can quickly pull in to know, Are you ready? Or, is like an administrative person going to free up the owner or the sales team's time enough to grow to kind of make up for that? And we can put that all down to timelines and, when are you going to be right side up,
Wow.
or what are the KPIs against that so that you're on track or the employee is performing and you're not burning too much cash.
It sounds like your service is very white glove. It is very custom
Yes.
tailored.
Yeah.
And you've got the team. The team ultimately are the members that make you and your practice and your business be so successful.
Yeah. I mean, I wouldn't be anywhere without a great team. It always starts with an idea, but without the group around you to deliver it, you've got nothing.
So, what financial signals suggest it's time to grow versus time to just simply stay put or stabilize? Do you have conversations about have this type of discussion?
Yeah. So, one of the main factors that I think a lot of people, especially first time owners, or if you are reaching for a new revenue height that you haven't been to before, that people miss is growth is expensive.
Mhm.
Growing your company costs money. Anyone who has grown knows this. You are going to increase expenses possibly before you achieve that new revenue goal. So, there is risk to it. So we do have conversations with all of our clients, especially when we're doing our pricing, to understand, are you a stable company? You're just looking to maintain where you're at, or are you in a growth phase? Should you be in a growth phase? What are your future goals? These are conversations that we have through onboarding so that we can understand those needs and help them plan accordingly, dependent on their goals and what they can afford.
So, you mentioned in terms of your fees, can you tell us just a general idea what when someone is going to be calling you after hearing this podcast? Hey, I want to, talk to Tevia about what kind of value she provides and how she goes about charging. Can you give us
Yeah.
some insight on that?
Yeah, it's like everything else I do, it's very
Mhm.
data based. So
Okay.
there's really no push and pull, or I don't leave it to my own bias. I have a formula and it's all volume based. So
Okay.
I do need to get reports from
Okay.
the potential clients. And I literally I take 12 months, whether they're a cyclical company or not, and we average that out so that it's fair both ways. If you're slow or high time, we don't change the billing and we turn it into a flat rate. So we find out
Hmm.
of the services that we provide, which the primary as an fractional accounting firm is
Mhm.
bookkeeping. We can do invoicing, bills, payroll, sales tax. We can monitor email accounts. We really engage with the team. So of those, I find out just what the volume and the expectation is for operating successfully. And then we have
Hmm.
formulas to just tie time to that essentially. And we get a flat rate. So all of our clients have flat
Great.
rates so they can budget and do their forecasting and know what our cost is. The only time that those change is if you are on a high growth company over time on averages. If we're on average at a higher time that takes the team more, then we will do a price adjustment. But otherwise, if you're a stable growth company, you can relatively expect to stay at your flat rate and be able to budget to that.
Okay. Sounds good. So, what mistakes do you see when owners scale too quickly
Oh,
without financial clarity to support their ambition?
disaster. No. Yeah, I mean,
Mhm.
scaling too quickly, many, many, many things can go wrong from a variety of levels, right? But I mean, the worst being that you can't overcome the cash flow crunch, or you might personally have to leverage that and get yourself through it. But I mean, growing too fast can have so many negatives in the wrong way, meaning you crushing your team, right? You might have a
Mhm.
fantastic
Sure.
team, but if you don't have a hiring cycle to support the growth and you're not plugging people in fast enough, you might lose great people. Maybe it doesn't topple your company, but what's the long-term effect of losing really great long-term people that, provide services to your clients? Things like that. There are so many things that can go wrong. I could probably fill a whole podcast of what I've seen for not planning correctly, with off of the cash flow, basically.
You emphasize simplifying workflows and using modern tools, technology, and perhaps even some AI. How do you better system, I should say, how do better systems change the way a business operate on a day-to-day basis?
I think that it allows you to focus more on your like core service. So if
Okay.
I take us for example, we really embrace new softwares, AI, new technology, because
Mhm.
what does that allow us to do? With us being white glove and we want to be talking to our clients, we want to be providing a great service. If we can be more effective and more accurate even, or whatever the adjective might be with the softwares that we use, we can spend more time talking to our clients and really finding out what is it that you need and how can we help with that. Just like any business out there, if you're working more efficient, if you're working better with the softwares and new AI that's out, whatever it is you provide, you can really focus on that. And ultimately, that's why your client is there. And then they're going to stay because they're getting what they want from you.
Sure. And what role do you think cloud accounting and real-time data plays in giving owners more information, therefore providing the data for them to make the decisions that they need to make? What's your
Yeah.
ultimately giving them more control of their sphere?
Yeah,
What's your thought
cloud-based
about
accounting, cloud-based anything. If I specifically put it to your pilots listening to this podcast, is it's about flexibility. It's about adaptability. Where are you in the world? And you might need to check something or pay a bill or look at your financials or whatever it might be. If you're on a long haul flight and you want to get something done, you can't if it's on your local desktop server at home or you have
Sure.
drag your computer with you. It's one of the reasons that Intuit, the biggest provider, of financial services, has almost exclusively gone away from desktop. They
Mm,
have their own reasons for that, but
mm,
one positive is the cloud accounting for its pluses and minuses. It's access, it's
mm.
adaptability. When we work remotely with our clients, if you're not on the cloud, how do we provide services to you? Some clients in the past have had to pay for a remote server that's effectively being a cloud. So the owner's benefit is not only access and adaptability, but it's also choice.
Mhm.
Before, if you wanted to only have local, well, you need to find your provider local and you need to have them come in your space and, or get them another user. And there's a lot of cost and a lot of inconvenience to that. Whereas it opens up the market and you can now work with someone anywhere in the world and that fits you and what your needs are because of that cloud access.
Great. So that helps you better be more proactive, right?
Yeah.
Your clients, how do your clients move from the reactive bookkeeping, which is probably the old model, to proactive financial planning, which is very similar to the white glove service that you are providing to your clients?
Yeah, it's all about timing and planning, just
Mm,
similar, to even what you provide, David,
mhm.
is you don't want to be getting your information days, weeks, months late, and then also not doing much with it. You want timely information that you also, I mentioned it before, you have a scorecard of goals and KPIs that you are matching it against. You or your team, is looking at it and you're using that timely to make decisions. That is the winning mix. And if you spend the time to do that, you absolutely will have, multiples of ROI on your time for that.
You said that business success is a two-way relationship. How do you build that trust and the accountability with the clients that you serve?
Well, I guess it's like anything else. You do what you say and you follow through. I
Mhm.
mean, we work very hard at understanding what the client is. Number one, knowing that we're a good fit for that. We don't offer services to companies that we don't think we're going to be able to obliterate for. But once you it's the proof, right? You
Yes,
provide, you deliver, you are on time, you don't under what is it, over promise and under deliver. Once you hit all those positives, you build a trust and a relationship with a client that then you can provide more value on top of.
very interesting. The mindset, what the mindset of shifting of business owners, what kind of mind shift do they need to make if they want to grow with confidence instead of operating constantly in stress,
Yeah.
which, is never good.
Yeah, I mean, there can be a lot of stress in business. And I think the mind shift that I've seen owners make is when you embrace more financial data, when you just embrace doing something new. If I look at it this way, if you're not having the results today that you are looking for, if you want to achieve more, if you have more to do, then the question becomes, what more do I need to do? Meaning, if I do the same thing over and over again every single day, but the outcome I'm getting is not what I'm looking for,
Mm,
well, then that's a pretty easy formula, right? You need to
sure.
change something in your mindset, change something in your routine, in your process to get a better outcome. So for me, I am constantly doing education and constantly
Mm,
in rooms with people who have gone before me and done more than I want to do. And I'm asking the question, what worked for you? What processes do you do? In the financials, what do you care about? And it's about not settling into what your current scenario is unless you are getting exactly the output you are looking for. If you're there, well, we're not talking to you. I mean, but if you're looking to
mm.
grow, if you're looking for more, the question becomes, what do I need to change? And I need to embrace that change. And it may be in what financials or planning you're doing, or it may be in processes, efficiencies, your team. It could be a variety of different factors.
So after working with so many small businesses, what do you think separates those that are successful and succeed on a long-term basis versus those that continuously seem to struggle?
A couple of things, like I mentioned, in 8 years, honestly, I've probably seen thousands of companies and
Okay.
financials and, talk to hundreds, if not more, of owners. And there's a couple of things. One would be kind of what I talked about, that somehow finding the way to maintain that hunger to learn,
Mm,
right? Every chapter, every one of us have ever gotten to and achieved, again, unless that's the ceiling of where you want to be, for the rest of us, there's more to do. There's more to learn. There's more to question. There's more to break, and to keep going. And the opposite of that is all of us in decades of ownership, have ups and downs. So I see a lot of owners that are just kind of burnt out and have had hardship and they've had a lot of hard years and they're not getting the results that they're looking for. And it's the ability to compartmentalize that and in a certain owners and being able to recognize I've got all these hard things going on, but I'm still going to find some more in the tank to push and to
mm.
figure it out. And really, that's a lot of the difference. And, power to them.
The thirst and hunger for more information and to be more educated, constantly learning.
Yeah.
Don't
Yeah.
sit and don't sit idle. Always
Yes.
continuing to move forward and strive. I love it. I love it. What's one of the financial actions a business owner that is listening today can take this week to feel more in control?
Ooh. I love to challenge owners, pull a new report. You have your favorites. Everybody that's not in the finance industry, they have a report or two that they lean on constantly, and it is their North Star and it's what they're comfortable with. That's another factor I would add to the last question that would help in this one is, are you still comfortable getting out of your comfort zone?
Mm,
We got to constantly as entrepreneurs push that. So I love to challenge and say, what's a report you've never looked at or haven't looked at in a long time that might give you a different perspective on your own data? And also do a little industry research, compare your own performance to your industry. The data is out there and you
mm.
can find it. ChatGPT is a great, source for a lot of people to just type in and get some of that information and get more perspective. Our opinions change when we have more information to make better decisions.
Absolutely. What excites you most about the work that you're doing at your accounting firm?
Well, what excites me is I mentioned before, I don't work in the day to day. I haven't in a long time.
Mhm.
And I love growing a company. But more than that, there is no person I love more than another entrepreneur. I've told my husband before, I'm not really eligible for regular, outings anymore with normal people. I love hanging out with owners. I love having business conversations. It's what fuels me. So for us, I don't really consider our sales cycle like biz dev or sales because
Mhm.
I just like having a conversation and it may go somewhere, it may not, but that's what excites me. I like being in the room with owners, we're people getting stuff done and that kind of gets me going. So
And where can listeners connect with you and learn more about your services?
yeah, we're all over the socials. TeKoda Accounting is the company name. So we
Okay.
have our website and our socials are under TeKoda Accounting. Pretty easy to find
Okay.
and we're happy to serve.
And are you able to provide an email that people can directly contact you?
Yeah, they're welcome to use mine. I'm happy to be a direct contact. And that's my name, Tevia at TeKodaAccounting.com.
And for those that are viewing this, you will see that at the bottom of the screen. And for those of you that are listening to this, it will be at the bottom of the show note. Any final words?
I appreciate the conversation. Thank you for showing up and being so well prepared. Like I said, I like seeing other perspectives and what you guys are focused on and getting to talk about business. Thank you.
Tavia, thank you so much for joining us and sharing your insight today. Conversations like this really highlight how important it is for business owners to have the right team in place, from proactive accounting to strategic wealth and tax planning. That's exactly what we focus on here, helping you, the viewers and the listeners, build a coordinated approach so that you're not just working harder, but making smarter financial decisions along the way. Again, if you'd like to connect with Tevia, please see the show notes. We'll have it all in the information below here. If you're looking to take more strategic approach to your wealth tax planning and financial future, feel free to reach out to our team here at DTY Wealth Planning Solutions. Thank you again for flying with us on Jet Setting Wealth Advisory. If you found value in today's episode, please be sure to subscribe, share it with someone who could benefit, and we'll see you on the next flight. Thank you.
Thank you for flying with us on today's episode of Jet Setting Wealth Advisory. If you enjoyed your journey through the fiscal skies with David T.U., don't forget to subscribe to our podcast and keep your financial knowledge soaring. For more insights and personalized advice, visit us at www.dtywealthplanningsolutions.com and connect with David directly